It was a pretty exciting week for the couch investing portfolio. This portfolio is up 3.63% compared to the S&P 500, which is just up 0.79%. Now, of course, if we go back a little bit, go for the last month or so, the portfolio is up 9.4% compared to 3.76% for the S&P 500. Now, if we go all the way back to when the portfolio challenge has started, which was late February, we're still behind. We're still only up 6.12% compared to 11.89% for the S&P 500. But as you can see in the last couple of weeks, we have been making quite a big remontada, as they say, a big comeback. Now, why is that? Well, it's because of the concentration, or at least the top 2-3 positions for the portfolio. Now, yes, PayPal still hasn't moved 1 inch, still under $60. But if we look at the total here, if we look at the total performance for the number 1 and the number 2 position, Tesla is now up 46% for me in this portfolio. Google Alphabet is up 37.7%. PayPal basically flat. But also we've got Palantir here up 24.62%. So top 4 positions have definitely moved this portfolio up and outperformed in the last couple of weeks. Now, I'm not saying that we are winning. No, we're not winning quite yet. There's still a long, long way to go. There's still the back half of this year plus the years ahead. This is not a 1-year challenge. This is a multiple year challenge. I actually don't intend on selling any of those positions other than maybe the smaller ones here, which were short-term plays. Lululemon looking for a small rebound maybe in the next coming quarters. We shall see what happens there. Adobe, I'm quite happy with the position I have. D-Local was supposed to be a short-term thing. Now I'm holding the back, but okay, fine. I'm down 21% on that position. I still think that this company is growing quite fast, is profitable, but they're investing quite a lot right now in the business. So in the short run, they're taking a hit, and the stock definitely took a big, big hit. I'm not even going to talk about SoFi, because SoFi for me is still down 13.56%, still under $7. But of course, we know earnings are coming up. I do still expect a good earnings report, good comments on the earnings call. Maybe we'll have the usual pop and drop, or maybe this time it can be different. Now, the topic of this video is obviously not, again, talking about all the stocks in that portfolio, no, but I want to touch on the selling too early aspect. Now, what does that even mean, selling too early? Is it a bad thing? Is it a good thing? Should you even care? Now, of course, you can watch the portfolio here. I've made some decisions. I've sold some stocks. I've bought, I sold, did some trades. That's fine. Some on the watch list that I've never bought, and they've continued to go up and up and up. For example, Celsius. Celsius is a stock that went up to the 90s each and every week. People are saying, oh, why didn't you buy? Why didn't you buy? Oh, you missed the boat. You missed the boat. I said, no, I have patience. I have patience. So I bought. Of course, I'm down now 14% because I bought, I think, at $60 or whatever. I will average down when I see the next earnings report and some commentary on that. So we'll see what happens with that. But let's take Celsius, for example, right? Let's take Celsius, and let's say you bought the stock a long time ago. Yeah, you bought the stock. You were up 2-3x or so because the stock was quite low. Stock went up to $40, $50 or so. You were quite happy. But then you see the stock going to $60, $70, $80, $90. You're obviously feeling the pain in your stomach. You still made 200, 300% on your investment. But now you're like, oh, could have done much more, right? You could have done much more. Me personally, I did that with AMD and Nvidia as well. Bought AMD at $22, $24 or so, sold in the 60s. Still made a good return, could have made much more. With Nvidia, bought in 2019 after the, let's say, crypto crash, and then demand for GPUs fell, a bit like what happened before the huge pop when OpenAI ChatGPT came out. Nvidia dropped, I think back then pre-split was at $175, made a 2, 3, 4x or so, sold because, wow, I had a 3x, a 4x stock in my portfolio. I was quite happy. Plus, of course, then came the pandemic, so there were ups and downs, ups and downs. Okay, I was quite happy. I sold. If I didn't sell, this would have been a multi-bagger for me. So of course it hurts. Now, yes, I did use that money to buy Tesla. Tesla has been up quite a lot since then as well. Not as much as Nvidia, but I still made money. Could have made more. So of course it hurts. But again, is it a mistake? Is it something that you should be looking to avoid in the future? I'll try and answer a couple of scenarios here, and of course, you can let me know down in the comment section below if you've had or if you've done the same mistakes, if you think there are things we should be doing better. Let me know down in the comment section below. Like, subscribe, do all of that. We're on our way to reach 50,000 subscribers, so thank you very much for all the support. Let's again take the example of Nvidia, right? Nvidia has been on a crazy run since the lows back here in October, November of 2022. Now, let's say you had the crystal ball and you bought here at those prices, right? At around $13 split adjusted. Okay, you bought here and then it reached $45, $50. Great return, right? In a short period of time, great return. So you're like, okay, look, my objective has been reached. My goal has been reached. I'm selling the stock. Okay. Little did you know that it went from $45 to now all the way to $135. Now, it can be that you put your money in another stock and that stock went up as well. Okay, fine. But maybe it's sitting in cash. Maybe you had to buy, I don't know, a house, pay for rent, school, education, kids, car, you name it. All the answers can be correct, right? Because you're still in the green. Quite a lot, actually. But the reason I'm putting this on the table right now is because I've made those mistakes and I'm learning each and every time. What I did learn is that you should not be selling your stock if the business does not give you any reason to sell it. Meaning, if the business suddenly we see margin compression, if we suddenly see more expenses, less profits, less free cash flow, change in management, things aren't going the right direction, something has changed drastically, the thesis has changed, then yeah, of course, quite easy, right? Sell, get out of it. But if the business continues to perform, even if one quarter is not as great, maybe even 2 quarters not that great, right? We've seen that with Nvidia. We've seen Nvidia go from the peak here in November 2021, from here $35 all the way down to around $12, $13. Yes, we've seen a deceleration in the business, but for some people that might not be a good reason or good enough reason to sell out of the whole position, because overall the company was still quite a dominant player in its field. The whole sector took a hit. That's also something you should consider. Is it just a company specific problem or is it a whole sector problem? Here, again, going back to the Nvidia thing, you could say here, okay, the stock is down a lot. Maybe I should double down because the business management does not really give me the clear message that, oh, it's doomsday scenario. We're going down. Nvidia is not going to grow anymore in any of these sectors. Of course, I could not have predicted this, that suddenly ChatGPT would come out and change the whole thing. No. Okay, fine. But even then, you had time. You had time to figure out, oh, okay, ChatGPT, OpenAI, investments in GPUs, who's a big player? Nvidia. Not only hardware, but definitely also software. We've talked about the software part of the business even before ChatGPT came out. It was still a small part of the business, but it was a part of the business that would become more and more important over time. So here, again, 2 scenarios. Could say nothing changed for the business. I'll just dollar cost average. Second scenario is like, okay, stock is down, business is decelerating for a quarter or 2. I'm out of it. And then maybe the next quarter or 2 when I see some improvements, despite the stock being up 20, 30, 40, 50% or so, even 100%, fine, at least I'm seeing that the business is now doing better. I'm back in. That's also completely normal. Coming back to the main point of the video is, of course, selling too early. So what did we say? 1, selling too early. No shame in taking profits. So you can take profits, take your initial investment and let the rest ride. So at least you're still invested, meaning future growth, stock goes up because the business still performs quite well. You still benefit from that. The stock does not move much or does go down. At least your initial investment is safe. It's back in your cash position or in another company. And then you can do whatever you want with what's left. It's also a good strategy. Now, another example is Meta, because Meta, it took a while, right? It took a while until sentiment changed. It took a while until the business performance changed as well, because here the business did take a huge hit. So yes, you could say that all the way from around $374 all the way back under $100, so a 76% drop. Yes, you could have liquidated your whole position. Didn't sell too early. Actually, maybe you sold on time. If you did not sell, like me for example, then yes, all your gains from the past were completely erased. But at a certain point, under $100, you start to think this is a company that still dominates, still reaches billions and billions of people on the planet. I do not see why it should be trading at such a valuation. And so let's say you double down. Then on the way up, you could easily have doubled your money in a fraction of time. Here, again, we go back to the same scenario. Should you be selling? Should you be selling too early? Here, you focus solely, again, on the business. What does the business tell me? Well, the business is definitely showing me, the business and the management, definitely showing me that there is a comeback story. The business is becoming more profitable, more dominant, actually growing faster as well, much leaner. So no reason to sell. On the flip side, you could be an investor saying, look, okay, I've been holding this stock for way too long. Now I'm back in profits, a dollar cost average, fine. I do not want to have the headache again of them investing in the metaverse, whatever. I'm done. Okay, you sell, break even, maybe with a little bit of profit, but then you see the stock continue to go up 50, 75, 100%. You start to think twice. Even though back when you sold, your gut feeling was, I'm done with this. Okay, investing is, let's say in a large part, trying to control your emotions. Buy, not buy. Sell, not sell. Add, don't add. These types of decisions, right? Okay, just part of the investing journey. But the most important point that I want to make here is look at the business. Don't always look at the stock. Yes, of course, like with Tesla, we've discussed. Tesla is up 50, 80%. 50% the last month, 80% since the end of April. Of course, there's no reason to chase the stock. Right now, we're still waiting for the upcoming earnings report. We've got the production and delivery numbers. That's fine. But we want to see the business. We want to hear management talk about the business, the industry. If you're done, if you're quite happy with the performance now, okay, you can sell. But again, maybe you're selling too early. So it's important to look at the business and not just at the stock. Can go on and on, look at Alphabet, look at Amazon, basically all the big tech companies that took a huge hit. Just the stock, the business, yes, some weakness a quarter or two. But then, of course, we saw a V-shaped recovery as we've seen here with Meta, with Netflix, Amazon, Alphabet, plenty of other companies as well. Why is that? Well, because the business was still doing quite okay. The stock does not always reflect what the business is doing, good or bad. And so now when I look at my portfolio, if I look at that portfolio right now, which is back in the green, has grown quite fast in the last couple of weeks or so, am I going to sell companies like Tesla, Google, even PayPal, which hasn't moved much, Palantir? Is there a reason for me to sell those businesses today? No. Purely based on the business? No, there's no reason right now. If I look at the stock, if I look at charts, overvalued, overbought, stuff like that, then yes, you could say that Palantir is overbought, Tesla is overbought, all of those things are overbought, fine. But again, I'm not here to time the market, I'm here to be spending time in the market. And as I've explained in the last, 10-15 minutes or so, I rather not repeat my mistakes of selling good companies too early just purely because the stock is up. As long as the business continues to perform, I am quite okay holding it. Yes, sometimes it will go down, I will dollar cost average. Sometimes we will go back in the red in a short period. That can happen 100%. So overall, that's about it for this episode. Bit of a different type of episode, I would say. Do share your thoughts and comments down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye bye.